Good afternoon, everybody. It's Charles Chadwick, designated broker and owner of CNC Realty. Today, we wanted to talk a little bit about inflation, what it is, what's transpired here recently, and what we're looking at with inflation and the housing market over the next 5, 7, and 10 years. So first, I always just want to start with what is inflation. Basically, inflation is general increase of prices, looking at the consumer price index. Basically, each unit of a dollar, as again prices increase, you can just basically buy fewer items. So for example, as inflation continues to go on, $1,000 today, let's just say $1 million today in 10 years would cost you $1.2 million, $1.23 million or so. So basically, your dollar today is just not as strong. And again, in the future, it's going to cost you more for a specific product. And when we're looking at housing prices here, when we look at who's been the winners and who's been the losers, so to speak, in this market over the last couple of years with inflation, homeowners have been the big winners. And why? Obviously, because home prices and equity has increased, because home values have increased overall. Renters have been getting beat up ultimately by increased renting because of the cost to maintain those properties. Rates and rent is increasing. And so one, they're not being able to benefit ultimately from home ownership and the equity wealth that they could be generating, but they're actually incurring a higher cost point because that money and that rent continues to go out. So winners have been, again, homeowners. When we're looking at the future and what we're forecasting, home prices, again, are going to continue to rise. Simply basic economics, the supply versus demand. So those that are asking, are we going to see a housing crash? Anything to that effect, we're just not seeing it because we're not going to see supply drastically increase versus what the buyers out there are ready and prepared to ultimately do. Inflation this year in 2023 is somewhere around 7 and 8%. The government tries to ultimately set about a 2% inflation rate. That's the good balance of, again, inflation and again, price increases versus wage increases, etc. But again, being at 7 and 8%, we are able to take our current dollar and buy less. And so as we continue to see that go over, projections at 3 and 3.25% year over year inflation over the next 10 years, it is certainly a time to buy. So there's 3 different options out here that we want to look at and talk about. And that's one, first-time home buyers. Again, as rent continues to increase over the course of time, now is the time to get in. Those that wait to see what the market's going to do are missing out on that opportunity to, again, build that equitable wealth in a particular property. Even with interest rates the way that they are, again, hedging property versus inflation, it is a wise time to go out there and start investing in yourself and buying that property versus, again, taking your rent and making somebody else wealthy out there. 2, those that, again, have equity in their current homes, it is a great time to, again, take that step up versus waiting. If you look at your current home price, let's just say $300,000, compound what that, again, equity will do at the current rate over the next 7 years, you're going to be at X. If you take your current equity and roll it up into that next home, that next tier up, say a $500,000, $600,000 home, exponentially, again, at what prices will do in terms of home values, you will start building even more equity in your particular properties. And again, that equitable wealth, and that's something we want to start looking at. It is a great time to start taking advantage of that and looking at what the future is. And again, building that wealth. The other option here are investments and investors. Again, taking that opportunity to invest in a particular rental property, looking at the rents that you can generate that can then ultimately pay down that mortgage for you. You're going to start building equity and obviously in paying down your mortgage. And 2, as the home prices continue to increase, you're going to be building additional wealth and equity in your particular property and hit that double-sided. So whatever your situation is, we want to talk to you about what the market's doing, what we're forecasting it doing. We want to talk to you about your current situation and how to navigate through this particular market to help you build that equity in your property. Give me a call, 402-575-0803. I know this just touches a little bit on this, but just want to talk about, again, what people are forecasting and, again, what we can do to help you start investing and start building equitable wealth. Again, 402-575-0803. I look forward to speaking with you.